In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, President Trump says the U.S. should sue Google and Facebook. This, as social media executives are grilled once again on Capitol Hill ahead of the first Democratic presidential debate. Plus, a legal loophole. American companies are finding a workaround the U.S. ban on Huawei. Will it last? And Apple hires a key chip designer as it pushes into making its own semiconductors. How this could be a game changer for future gadgets. But first to our top story, shares of Facebook and Google dropping in Wednesday trading on the heels of yet another presidential rant against U.S. social media companies. Here's what President Trump told Fox Business earlier. You know, look, we should be suing Google and Facebook and all that, which perhaps we will, okay? To talk more about the market reaction to the president's latest threat, let's go to our Bloomberg cross-asset reporter, Sarah Ponczak in New York. Sarah, shares did react immediately to the president's remarks. What happened today?
Absolutely, they did. Except if you look at Facebook, you look at Google, you just saw those share prices on the screen, down about 0.6%. So not anything huge. It was still pretty minimal, but we clearly saw, even pre-market, before markets open, we saw the stocks react off of these headlines. Interestingly enough, he did also attack Twitter in a way, and Twitter actually rose today. But this really all just harkens back to the conversation that we've been having over antitrust laws. I mean, everything we have heard over the DOJ investigations, the FCC investigations, the fact of the matter is that this is something that is here to stay, and we are probably going to be hearing more about this, not just in the Democratic debates coming up tonight and tomorrow, but also through the presidential election and then probably on through the next 5 years or so. Because when you look at investigations of these sorts into large companies like Facebook, like Google, it's not going to be a quick process. It's going to take years worth of time.
Right. The House Antitrust Committee has already launched an investigation into some of these companies. We're going to talk about that a little bit more in the moment. But first, I want to talk to you a little bit about chip companies. Also rallying on this news that some of them have found a workaround on this U.S. blacklisting of Huawei. What exactly is happening?
Right. This is a really big deal. Micron reported their earnings last night, and they said that they have actually resumed some shipments to Huawei because their lawyers found that some of those components aren't necessarily included in the ban. And when you think of the extent of revenue for the likes of Micron that come from Huawei, it's very large, already 13%. 57% of the revenue comes from China alone. And it's not just Micron that has resumed these shipments. We also heard from the likes of Intel. So Micron up 13% today. It was the best day for the stock since 2011. We also saw Intel up, and actually every single semiconductor stock in the Philadelphia Semiconductor Index was higher today. So really a broad-based gain on the back of these hopes.
So how does this fit into what's been happening over the last couple of weeks as the threats of tariffs have escalated and we continue to wait for this meeting between President Trump and President Xi at the G20?
It really is a wait-and-see moment. It's been a wait-and-see couple of weeks, I should say, actually, because it seems investors are just holding on and waiting to see what comes out of the G20 meeting. Are we actually going to see a delay of the next $325 billion worth of tariffs? Because there have been hints from the administration that have said even if they don't come to a deal, and most investors are not expecting a deal at the meeting this weekend, that they do at least expect a kicking of the can down the road. So where this Huawei news actually fits in is good, because if these keep going on, if we do even see more tariffs, at least you know that these semiconductor companies won't be hit to the extent that you thought before if every single one of those components that they do ship to the company were in fact banned.
All right, Bloomberg Sarah Ponczak breaking it down for us. Thanks so much, Sarah, for that update. To continue our discussion now on the intersection of social media and U.S. politics, I want to bring in Bloomberg's Ben Brody in Washington, where he covers the tech company's corporate influence in the Capitol. And in studio with me here, our social media reporter, Kurt Wagner. So, Kurt, the president's threats, do they have any teeth?
The president likes to threaten a lot of people on Twitter, and this is not the first time we've heard him complain about the companies being, anti-conservative, or in Twitter's case, keeping him from reaching his wide Twitter audience that he likes to talk about.
But saying he might sue them, taking it to another level.
Sure, and I don't think the president probably will sue them, but we already know that the companies are talking to the FTC, and they're under investigation by other regulatory bodies. So I don't necessarily think that it adds a totally new element that he's talking about, although, of course, he is the president of the United States.
Ben, you were at this hearing today where House leaders grilled the social media executives from Facebook, Twitter, Google about fake news, about misinformation, about conservative bias. What was your big takeaway from the hearing today?
Well, it was less about the charges of anti-conservative bias coming from the White House, which, as you said, is something we've heard a lot about. But what I was hearing was a lot of discontent from the lawmakers about how the companies have been handling misinformation and terrorist content. Kind of on the one hand, they're worried they're not quite doing enough. But then you look at something like deep fakes and manipulative videos that you and I have talked about may really be a big part of the 2020 campaign. And it seemed like the lawmakers, of course, particularly the Democrats, are really quite worried that the companies just haven't done enough on this, and also don't have policies about what they actually should be doing. So you talk about the Pelosi video, which wasn't a deep fake, but they just don't have a policy about how they treat that any differently than a fake article.
Meantime, there was a quite heated moment from Congressman Max Rose of New York, tearing into their handling of the Christchurch shootings and terrorist content in general. Let's take a listen to that.
I'm getting to the fact that you're not taking it seriously because there's no public building, there's no full-time staff, there were no public POCs until after the Christchurch shooting.
Well, I think
that's what I'm speaking to. How is anyone supposed to think that you all take this collective action problem seriously if you have no one working on it full-time? This is not something that technology alone can solve. This is a problem that we are blaming the entire industry for, rightfully so.
Now, Ben, that was an interesting moment there because he was referring to the Global Internet Forum to Counter Terrorism, which is this organization that these tech companies have created together to fight counterterrorism. And yet he's saying, who even works there? Is this really a priority if no one really works there? Tell us about that moment.
Yeah, it was definitely one of the tenser moments in the hearings. He really laid into the executives, and he basically told them that their efforts didn't convince him that they wanted to stop this issue. He said, you don't have anybody full-time working in a brick-and-mortar building. I think Kurt can talk a little bit about how what we call the GIF CT is set up. It's not quite set up like that. Some of the people who are working on it full-time are actually in-house at the companies. But nonetheless, this is the kind of anger that the companies are facing here on the Hill, where lawmakers are just saying, look, you have all this power over the messages that are going out. We're about to go into an election, and you have not convinced us that you are doing enough. And that's a real problem for the companies right now.
Kurt, what is this organization actually doing, and what does it say about how much of a priority it is?
Yeah, well, all these companies have people, searching for this kind of stuff, but they're their own employees, so they don't necessarily all work in a building together with people from Facebook, Twitter, and Google. That doesn't mean that they're not actually proactively looking for this or trying to take it down. I think the anger and frustration is certainly merited, and there's a lot of people who felt the same way, especially after that video. But Facebook has been talking now for the last year and a half about how much it's doing to try and solve this stuff. It is not perfect by any stretch, as we know, but to say that they aren't trying at all is probably a little bit of an overstatement.
Meantime, the first Democratic presidential debate will be broadcast on NBC tonight, will be live streamed on NBC's accounts, on Facebook, on Twitter, on YouTube, and they're going to have to be policing all of the reaction throughout those couple of hours. You've talked to the companies about what they've actually been doing to prepare.
Yep.
What do you know?
Yeah, they are going to have both Twitter and Facebook I've talked to today. They're both going to have teams basically dedicated to monitoring the debate, going through making sure that there aren't threads that of misinformation that are starting to gain traction. Facebook, you may remember, set up this war room around the 2018 midterms. It's basically just a glorified conference room where a bunch of employees sit together so they're all in person and they can act quicker. It sounds like they're going to be doing something like that again tonight for the debate. So unlike in 2016 where they just weren't even expecting it, at least now they say we're not only expecting it, but we have people on hand who hopefully can tackle misinformation as it happens.
Ben, a lot of folks listening very closely to what Elizabeth Warren will have to say. She's obviously taken a hard line on tech companies. There are billboards here in San Francisco about breaking up tech companies. That is what she is advocating. What is this sort of expectation of what Warren might have to say against this backdrop of everything else?
Right. I mean, I think the question is how many of the candidates are going to sort of rush to align themselves with Warren. Now, you saw when she came out with her breakup proposal that a couple of candidates sort of said, yeah, well, I want to break them up too. I want to see how much more of that we see tonight, and then how many more people might take a moderate position, like you have Senator Amy Klobuchar, who wants to increase the scrutiny of mergers, but maybe doesn't want to go all the way to breakup. Then you have some folks like former Vice President Joe Biden, who maybe doesn't want to bring the hammer down on them all that hard at all. So I want to see how they fill into those three camps. And when it comes to Warren, I think it's important to say that she's going to be really, I think, the focus of the debate in lots of ways. And I think that means we may be talking about tech policy.
All right. Well, we're certainly going to be watching to see where the battle lines are drawn when it comes to big tech. Bloomberg's Ben Brody, Kurt Wagner, thank you both. Coming up, a legal loophole. Some U.S. tech companies think they have found a way to continue working with Huawei despite being on Trump's blacklist. This is Bloomberg. Now to a story we continue to watch. American companies think they have found a legal way around the U.S. blacklisting of Huawei. Micron and Intel are among those shipping some components to the Chinese telecom equipment maker once again. Here is what the Micron CEO had to say about it.
Through this review, we determined that we could lawfully resume shipping a subset of current products because they are not subject to export administration regulations and entity list restrictions. We have started shipping some orders of those products to Huawei in the last 2 weeks.
The companies may be able to classify some of their technology as foreign made, not made in the United States. That would allow them to potentially get around export restrictions. To discuss, we are joined by Bloomberg Tech's Ian King and Peter Elstrom, who is with us from Tokyo. So, Ian, how did the chip makers decide this?
Yeah, I mean, that's a very good question, and that was about as much as anybody got yesterday. Sanjay was asked multiple times to explain this, to explain the extent of it. I got to talk to him after the, after the conference call. Really, he was just sticking to the party line, being slightly evasive. Yeah. What we learned from our reporting was that there might be something of a loophole in terms of where the IP that goes into the chip comes from. If less than 25% of that comes from the US or originates in the US, perhaps that gives them this ability to continue to ship the chips.
Peter, give us the view from Asia as the US has cracked down. As you know, over the last few weeks, US suppliers have been cut off from Huawei, and tensions between the US and China have escalated.
Well, it certainly created the sense of crisis at Huawei. They felt like they were under fire. They were not going to be able to get these critical components that they needed. It's not just chips. It's also software and all sorts of other components, including optical components. So the idea that some of these chip makers are resuming shipments to Huawei is certainly going to be seen as a relief from their side and for the chip makers themselves. You saw Micron shares rally today. There was a wide rally in the chip maker market. They feel like maybe there's an opening here, but it's not clear how this is going to work out and whether this opening is going to last.
So, Ian, we know about Intel, we know about Micron. What about Broadcom? What about Google, supplying Huawei with the Android operating system? Right.
We're not exactly under an avalanche of willing companies that want to come forward and paint a target on their heads. Essentially, I mean, you have to think about it from their perspective. They're in a tough position. On the one hand, they want to respect the law, stay on the right side of this administration, which has obviously been very vocal. Flip side of that is China is their biggest market. They absolutely have to be there. Huawei is one of their biggest customers. So they're trying to balance both sides. So, we're trying to work on this. We're trying to find out more, but nobody's willingly saying, hey, yeah, no, I'm still shipping.
We still haven't gotten a comment from the White House on this yet, but our sources are telling us they're
they
frustrated.
Haven't commented officially on this, but they were very clear when they first came out with the blacklisting of Huawei that this was aimed at punishing a company they felt like was helping Beijing in espionage, and it was a risk, was a security risk to them. So it's not clear how they're going to react to this at this point, and whether they may try to do something to try to close the loophole over the long
yeah,
term.
I mean, last night our colleague Jenny Leonard in Washington, she did some reporting and reached out to her sources, and apparently people in the Commerce Department and other parts of government were not pleased to learn that this continuation of shipping was actually going on. So we don't know what actually they can do about it, or whether they actually will do something about it, but we do know that they're aware of this, and we do know that they're not pleased.
And do we know that this legal loophole for sure exists? Is this legal?
Well, it's important to say these are big established companies. Micron and Intel don't take legal risks like this lightly. They certainly have had lawyers looking at it. As Micron CEO explained yesterday, they initially stopped shipping, and then their lawyers looked at the specific restrictions here and decided that they could proceed. So they're pretty confident that they're on solid legal ground at this point, but that ground could change.
So we're waiting for this meeting to happen between President Trump and President Xi at the G20. What's going on inside these companies right now? Is there a great deal of suspense? I mean, are they walking on eggshells, wondering what's going to happen?
Yeah, I mean, as we said, I mean, they want what Sanjay Mehrotra said yesterday is, look, we want a resolution to this, but we want a resolution that will stick around. We don't want this uncertainty. We don't want this backwards and forwards. We don't want to be basically tennis balls in this sort of trade game that's going on. We want to know what we can do and what we can work with going forward, because China is so important to them.
The G20, Peter, will be held in your neck of the woods. What are we doing to prepare to cover this, given that it could go any which way?
Right. Well, certainly Bloomberg is gearing up to cover it, and we'll give it full attention. I think in terms of these trade issues in particular, the expectations are pretty modest about what is going to come out of this. We reported earlier that the U.S. is probably going to hold off on imposing this next round of tariffs. So we don't think that there's going to be a resolution at the meeting. But if Trump and Xi are able to sit down, perhaps they can at least lay out a roadmap to reach some sort of resolution farther down the line.
All right. Well, I know you'll be very busy, as will you. Ian King, Peter Elstrom for Bloomberg. Thank you both. Coming up, Facebook is boasting a whopping 27 partners for its new cryptocurrency project, but not all of them are completely sold. Who and why? Why not? Next. And we're live streaming on Twitter. Check us out at Technology and follow our global breaking news network, TikTok, on Twitter. This is Bloomberg. Facebook said last week that 27 partners, including Visa, MasterCard, and Uber, had signed on to its new cryptocurrency project, Libra. But according to the New York Times, those partners aren't fully on board. Executives at 7 of those partner companies told the Times that they signed non-binding agreements because they knew they weren't obligated to use or promote the cryptocurrency and could easily back out if problems arose. Companies are hesitant to join the project as the social media company faces off with regulators around the world. Joining us to discuss, Bloomberg's Julie Verhage. Julie, Facebook has set off a firestorm, not just in the United States, but in Europe with lawmakers criticizing or being skeptical of this project. Who are these companies that have partnered with Facebook that have said they're skeptical too?
Right, so a lot of them, leading up to this announcement, we got a big list of all the companies that are involved in this, all 27. And there's a number of them that were excited to talk about it, and then there were a lot of others that were like, the statement we have in there is all we're really going to say. And then on background, they'd say things like, we haven't paid them anything yet, and we haven't signed anything saying that we have to stay in this. We've just sort of said, hey, we're willing to start exploring this with you, and we can back out at any time. So I think not only are regulators very weary of what Libra and Co-Libra, the association, might become, but a lot of its partners are too. So something that I'm going to be watching over the next few months as they're starting to create this consortium, the agreement that they have together, and get this list of partners up to 100, hopefully, is just if anyone ends up backing out. The Times story also points out that something I hadn't heard was that they had approached Goldman, Fidelity, and a few others, and they'd actually declined to join at that point. So it'll be interesting to see if they actually do get banks involved, because David Marcus on Bloomberg last week said that they do hope to get banks in this consortium, and he expects that they will.
Right. The New York Times reporting that they approached not just Goldman and Fidelity, but also JP Morgan, who declined to participate at the time. Facebook in a statement saying that the company plans to engage in a healthy dialogue and debate with our fellow founding members and to welcoming additional members over the coming months. We know this will take time. It won't be easy, but together we will be able to make the Libra mission reality. Julie, talk to us about the challenges ahead in getting not just lawmakers on board, but regulators as Facebook is going through an investigation by the FTC, a potential investigation by the FTC over antitrust and general distrust from the public.
Right. So especially on the trust from the public aspect, when we were interviewing Facebook for this story leading up to it, they said things like, we have this association. It's going to be a subsidiary of Facebook and it will not be sharing information with the broader company. And, they said things like that with WhatsApp, too. So they really have a big hill to climb here in just earning trust from not only partners, but people like you and me, and as well as people in D.C., which we should find out more in a couple of weeks when they have the hearings in the Senate and the House on July 16th and 17th. I think that's going to be one of the big areas where we've already seen lawmakers come out in the U.S. and across the globe voicing concerns over this, and this is sort of their first chance to, talk to David Marcus, the architect of all of this, and get a lot of questions answered. I expect it'll be, a full-day hearing, and we'll be covering it fully on Bloomberg.
Now, you cover financial technology, Julie. What are you hearing from your sources in that community about this announcement? What kind of waves has this made?
I think a lot of people are still wait and see. Like a lot of the partners said when we were interviewing them, is that in their minds, not much has really changed so far. This was just Facebook finally announcing to the world what they hope to do. There's no agreement set so far. Like I said, none of the partners have signed anything where they have to stay on for 5 years or sent any money over. So it's basically just we kind of know what their plans are. We have no idea what currencies or assets are going to be backing Libra. There's a lot of decisions that have to be made at this point. And I think step one is, deal with DC, make sure that they're dealing with regulators and stay on their good side as they haven't necessarily in the past. And then getting that list of partners up to 100 and making sure that they can get these groups together to actually agree on things. Because a lot of the members that they have so far, payments companies could feel threatened by Libra. And that's one of the biggest reasons that they're like, $10 million is a very small price to pay to just have a seat at the table and make sure that if Libra does succeed, we're not disintermediated in any way around this.
All right, we'll continue to cover. You'll continue to cover. Bloomberg's Julia Verhage, thank you so much for that context. Coming up, hanging on the telephone. Is the NSA still after your phone records? We'll look at a discovery that the ACLU is calling beyond redemption. That's next. And if you like Bloomberg News, check us out on the radio, listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Bloomberg Technology, I'm Emily Chang in San Francisco. When it comes to the privacy of personal data, the main culprits of people's anger tends to be big tech companies like Facebook or Google. But before that, much of the debate centered around the NSA. As you remember, the secretive government agency began covertly gathering domestic phone and text data after September 11th. That bulk collection ended in 2015. But now, an ACLU Freedom of Information request has revealed that the NSA was still collecting records on U.S. calls and text messages that it wasn't authorized to in October of last year. To discuss, in Boston, we've got Jamil Jaffer. He is the Vice President of Strategy and Partnerships at IronNet, a cybersecurity firm started by the former director of the NSA, retired General Keith Alexander. Before that, he served as senior counsel to the House Permanent Select Committee on Intelligence. One of his duties there was oversight of NSA surveillance. So, Jamil, what happened here?
So, Emily, as you point out, the 215 call data records collection program was modified in 2015 by the USA Freedom Act. And what happened here was that the phone companies were put in charge of giving data to NSA under this new program, and they oversent too much data, the wrong kind of data, to NSA in the aftermath of this legislation. So what we have here is an error for sure, an overcollection, but an error made not by NSA, but by the phone companies.
So how do you do this by accident?
Well, look, what's going on here is that NSA is seeking specific information about potential terrorist threats, and the phone companies are producing records. And sometimes what happens is they pull a certain set of records, and that records come attached with other records in their database. And unintentionally, they provide these data thinking they're providing the right stuff, and it turns out that what they provided is too much. What happened here, interestingly, is that NSA itself identified that the information was an overcollection and took steps to stop the collection and to say to the phone company, hey, you need to fix the way you're producing this information. We don't need or want this data. Give us only the stuff we're allowed to have under the law.
So can we trust, given all of these issues, given this error, that the NSA is not still doing this, or the phone companies are not still doing this, and that this couldn't happen again sometime in the future?
Well, I think what's important to note here is that this is not an intentional, sort of overcollection or an effort to go beyond the law, either by NSA or the phone companies. It appears to have been an unintentional error. Now, we have seen a lot of these over the course of this program, and that weighs in the calculus of whether the government continues the program. As you know, there's an ongoing debate within the Trump administration about whether to seek reauthorization of the program from Congress. But under both the Bush and the Obama administrations, it was seen as a very productive program in the sense that it was an early warning system against terrorism. And so there's an ongoing debate, as there has been, about the value and the relative costs of the program. And that will continue going forward, both with Congress and the public eye, as well as with the administration talking to Congress about whether they want to reauthorize it.
Right. There are still folks out there saying that this data is valuable, that this collection should still be happening. Tell us about that argument.
Well, part of what's going on here is that the data being collected is what is believed to be phone calls between terrorist targets overseas and people in the United States. If you can imagine, those are probably the most important calls you want to know about. If that's happening, you want to see, are these people involved in terrorism here in the United States? And if so, what should we do about that? It actually limits the scope of content collection, which is the really privacy-intensive stuff, because what it does is it looks just at metadata to identify who the good targets for collection are and who shouldn't be collected against. So in a lot of ways, there's some privacy-enhancing aspects of metadata collection that limit the scope of what you might do on content collection. Now, that being said, there's been some debate about how valuable the program is. Did we get enough people? Was it just additive to other collection things? And I think part of what that reflects is an understanding of how intelligence collection works, right? Intelligence collection doesn't always give you the obvious right answer right here. It's a thing of bringing together an amalgam of a lot of data to identify who might be doing bad things here in the United States against Americans. And that's the key to this program. Is it's one element of a much larger effort that aims to protect us against terrorist threats and other foreign intelligence threats.
But there's also a sort of larger effort, at least in this particular case, as an example, to sort of reduce the power of U.S. surveillance. And in your view, as somebody who had oversight over the NSA's actions, is that a good thing? Are we more or less vulnerable than we were before?
Well, I mean, Emily, we're seeing all sorts of huge threats out in the world today. We know about the efforts by China to conduct cyber attacks against U.S. companies and the like. We've seen what Iran has done in physical space with respect to oil tankers in the Persian Gulf and shooting down a U.S. drone. We know that North Korea is engaged in major cyber attacks, including WannaCry, and Russia with the NotPetya attacks, whose anniversary is tomorrow, my birthday. We know that they engaged in attacks against Ukraine, but it had a huge effect on international companies, including Merck, Mondelez, and Maersk. And so we know that people are getting aggressive in this space. And so if we're going to reduce our collection capabilities, whether they're against foreign terrorist targets or foreign nations, that's going to make us a little more vulnerable. Now, the trade-off between how more vulnerable we are and whether we get these benefits from cost savings or privacy benefits is a hard one to make, and one the government is constantly looking at. But we shouldn't just say that there aren't very real threats against our nation, which there are, and it shouldn't be obvious that we always should be reducing our collection capabilities. That can have negative effects too.
Jamil, happy birthday. Thank you for joining us the day before your birthday. We appreciate it.
Thanks, Emily.
Jamil Jaffer, thank you as always for stopping by. Well, changes at YouTube. The streaming video platform said it'll let users override automated recommendations. This after Susan Wojcicki, the CEO, and other YouTube executives were criticized for being either unable or unwilling to act on internal warnings about extreme and misleading videos. Wednesday, YouTube wrote in a blog post, although we try our best to suggest videos you'll enjoy, we don't always get it right. So we're giving you more controls for when we don't. Joining us now, Bloomberg's Lucas Shaw. So Lucas, tell us about how dramatic a change this is.
I mean, it's pretty significant when you consider that the entire principle of YouTube and a lot of new media tech companies, both YouTube, Netflix, Facebook, they say that they collect data on their users to tell you what you like. They will know more about their users than some of your friends will even know because they can see your full search history or your full viewing history. But this is a recognition on the part of YouTube that there is a growing frustration with kind of how these different algorithms recommend videos. Now, they're very benign forms of that. Maybe you get recommended a music video or a late night clip that you don't like. That's okay, you just choose not to click on it. But I think there are also a lot of examples of algorithms recommending maybe somebody with political views that you really don't agree with, or people saying something racist or homophobic or misogynistic. And those, those viewers do not want to be recommended those videos, and now they have the ability to silence a particular channel.
If you turn the algorithm off, does that mean potentially that users would watch less YouTube if they're not getting automatically pushed new videos when a video ends?
That would certainly be one of the fears for YouTube, which is why it's hard to see them totally turning the algorithm off, because it is engineered to kind of feed you more of what you like. I think of it now, there's somebody who used an analogy kind of like candy. You get fed one piece of candy that you really like. It's hard to stop eating more of it once you start. And so I don't think YouTube will fully get rid of the algorithm. This is more of kind of a selective way, and something that a lot of tech companies have embraced. If there's something that's particularly offensive, on Spotify, they too have enabled a feature where you can block a particular artist that you find is either not your taste or is offensive to you in some way. Because after kind of cases of artists who were abusing women, or a case of somebody like Michael Jackson, who is accused of all sorts of molesting of children, some people just didn't want to hear his music.
Meantime, speaking of anti-Semitic, YouTube has found itself in another controversial situation in Europe, where they, as I understand it, shut down one channel. At the same time, they were making policies about Nazi speech. Tell us about what's going on there and what this means for the EU.
Yeah, well, Europe, I think, is where YouTube and Google and most tech companies are, by and large, a lot more concerned about some form of regulation. Because the US government has shown less enthusiasm about punishing tech companies. There have been some investigations out of the FTC, and we're waiting to hear the results of one on YouTube here. But by and large, Europe is where the tech companies have come under a lot more scrutiny. And kind of the case that you mentioned with regard to anti-Semitism, to me, is just another example of how YouTube has really struggled with where to draw the line on what is appropriate and what is not. YouTube tries to err on the side of not taking things down. It believes in allowing more speech. But there's some cases where people get so riled up, so upset, that they sort of go against their own guidelines and will take something down in a one-off case.
All right, something we'll continue to follow. Bloomberg's Lucas Shaw, thanks so much. Coming up, President Trump and Chinese President Xi Jinping will attempt to resolve trade tensions at the G20 summit this week. How the meeting could impact Apple. Next. This is Bloomberg. Facebook CEO Mark Zuckerberg is currently speaking at the Aspen Ideas Festival in Colorado. We've been monitoring the conversation. He's been talking about election interference on social media, how the company has spent billions of dollars on election security in general. He also talked about how Facebook can only do so much, he believes, and how it is up to governments to make a difference with election laws. Take a listen to a bit of the conversation.
As a private company, we don't have the tools to make the Russian government stop, right? Or for, we can defend as best as we can, but our government is the one that has the tools to apply pressure to Russia, not us.
Familiar refrain there. Facebook has said in the past they simply can't keep up with all bad actors. We're going to continue to listen in there. He also touched on the Nancy Pelosi deepfake quote-unquote videos, saying they made an execution mistake there. We'll bring you any more headlines as we have them. Meantime, Apple shares traded higher Wednesday after U.S. Treasury Secretary Steven Mnuchin gave a positive outlook on a U.S.-China trade deal. In an interview with CNBC, Mnuchin said he was confident President Trump and Xi Jinping could make progress in trade talks at the upcoming G20 summit. He said, quote, "We were about 90% of the way there, and I think there's a path to complete this. A deal could save Apple from needing to rethink manufacturing and increase prices." Meantime, President Trump warned of more tariffs if a deal does not come out of the summit. He told Fox Business Wednesday, "My plan B with China is to take in billions and billions of dollars a month, and we'll do less and less business with them." Joining us to discuss, Wedbush Securities Managing Director Dan Ives and Bloomberg's Sarah McGregor, who covers trade. So, Dan, where does this leave Apple?
Look, I mean, Apple is really the poster child for the U.S.-China UFC battle, and that's why there's a lot riding going into G20. You know, we believe it's actually worth about $20 to $25 to the stock. Because remember, they're not just impacted on the demand side, but on the supply side. With Foxconn, that's where they bet the farm in terms of the mass amount of iPhone manufacturing. So in our opinion, this is really a fork in the road situation for Apple. Right now, really an innocent bystander, but it comes down to if we get a trade deal, that's a stock that's going to go meaningfully higher in our opinion.
So, Sarah, look, it's not the first time we've heard differing messages from the president and members of the administration, but what are we supposed to make of this?
So I think that Treasury Secretary Steven Mnuchin, his comments are of no surprise all along in this process. You know, even through the ups and downs, he's sort of been the happy-clappy member of Trump's cabinet who's, you know, along with people like Larry Kudlow, a White House economic advisor, has sort of always had the view that a deal can be made. In fact, Mnuchin himself last year presented Trump with a deal that he had made with China, and Trump rejected that. So, you know, I think he's the markets guy. He's from Wall Street, and he wants to appease people. He definitely doesn't want to make a panic ahead of this meeting, for sure. You know, Trump himself is saying that he may go forward with these tariffs, and that's really what matters. If this meeting doesn't go well, Trump is ready to move forward with the tariffs. Of course, it could go swimmingly, and they could end up having a deal to have more talks. That seems like a pretty likely scenario as well. But you know, reaching that deal ultimately in the weeks and months ahead, even if they agree to keep talking, that's where the difficulty lies.
So, look, Dan, what do you imagine, let's say Apple as an example, executives are doing right now? Is it simply a wait and see, or are they actually drawing out different scenarios whereby if the meeting doesn't go swimmingly, as Sarah says, they have a plan B?
Yeah, I mean, they're definitely hedging their bets. I think starting to study potential alternatives outside of China, but we've talked about realistically only 5 to 7% of production could maybe go to an India or Vietnam, best case in the next 18 months. So that's why those are long-term plans. But right now for Apple, even though they need to hedge their bets a bit, that's why Cook continues to be a pseudo-ambassador, you know, really between U.S. and China. They are the poster child for this trade war, and that's why it comes down to if the $325 billion never happens, this is all noise and Apple makes new highs.
All right, so Sarah, this is now happening in a matter of days. What are we expecting in the lead up?
So, you know, this all came together quite quickly in terms of, you know, the two leaders of the world's biggest economies meeting. You know, it's come together in a bit of a haphazard fashion. And so the agenda, of course, has sort of been evolving. You know, Trump and Xi, when they met in December at the G20, it was sort of the same scenario, and they did manage to come out with a bit of a truce. So I think that's the ultimate outcome. They can talk about the bits and pieces of the deal, but ultimately, if they're giving their trade negotiators a mandate to move forward and to try and come up with a deal, that's sort of the best case scenario at this point. And I think, you know, companies, that's sort of what they're watching for, you know, just to buy a little more time. Of course, them even coming up with a deal just leaves this total environment of uncertainty. And I think, you know, businesses are working around that. We had this important story about Micron finding loopholes in export restrictions that have been put on sales to Huawei. And, you know, companies more and more are just trying to find loopholes and ways around the tariffs and other restrictions.
All right, Sarah McGregor, who will be covering every beat of the drum for us as this meeting approaches, and Wedbush Securities Managing Director Dan Ives. Thank you both. Still ahead, she went from being homeless to launching her own venture capital firm. How? We will hear how Backstage Capital founder and managing partner Arlen Hamilton broke into Silicon Valley with a bang. Next, this is Bloomberg. 4 years ago, Arlen Hamilton was sleeping on the floor of an airport and living on food stamps. The former music manager had no money, no degree, but she had one goal in mind: to invest in underrepresented entrepreneurs. Today, she is making waves in the white male-dominated world of venture capital. Her venture capital firm, Backstage Capital, has invested over $5 million in 100 companies launched by women, people of color, or founders who identify as LGBTQ. I sat down with Hamilton, the founder and managing partner of Backstage Capital, in the latest episode of Bloomberg Studio 1.0, and asked about how she made her way from backstage music manager to rule breaker in Silicon Valley. Take a listen.
It actually kind of correlates because it was while I was on tour that I knew of a Troy Carter, so Lady Gaga's manager. I knew of a Scooter Braun, Justin Bieber's manager. They were all making these investments, these small investments into startups in a place called Silicon Valley. And to me, you know, that sounded like, okay, that sounds interesting. Let me see why these interesting people are interested in that. And I realized, oh my goodness, I'm an entrepreneur. I'm a startup founder. These are my people.
How did you learn about Silicon Valley? How did you find this place? How did you figure it out?
I've been watching you for, I think it's been about 5 years. You're a staple here, and so much so that I associate Silicon Valley with your image. And it was a combination of just looking up every video possible on YouTube. There's some podcasts I could listen to, but most of it was like reading blogs and just reading everything. And then I created flashcards. So I bought index cards, and I put everybody's, like, the player's name on it. So like Mark Andreessen and Stuart Butterfield and Aaron Levy and all of these people, they're now investors in our fund. But I first had them on these cards of like, who are they? What do they mean to the ecosystem? And so I was just teaching myself everything I could because I wanted to be ready to go in and pitch to an investor. I wanted to know what was on the other side. And it was then, while in that process of, I want to start my own company, that's when I started seeing, wait a minute, no one is taking me seriously. And if they're not taking me seriously, and I just went through all of this, I wonder how they're taking someone who maybe doesn't put a G at the end of their sentence, at the end of their words, or maybe has a slight Southern accent, or maybe didn't go to the college that they did, that they went to, and isn't as confident as I am in talking about why that's okay. Because the investors, these white men, which was mostly what I was talking to, they were not bad people. They were not like jerks for the most part. Some of them were. And you know who you are. Some of them were. But most of them were just like kind of in their own little bubble, in their own little world, and they just wouldn't go past that.
Now, you made it from Texas to Silicon Valley.
Yes, I did.
But it wasn't a straight line. I mean, you were sleeping on the floor of the airport.
Yes.
You were on food stamps.
Yeah, it was tough a lot of those times. And that's actually goes back to why when people say that I don't deserve this, I just kind of think to myself, okay, they weren't there on the floor with me at the airport watching venture capitalists walk by with their roller bags. Because every day, I didn't know that I was going to stay there that next day. It was always, that last night was the last time I'm doing that. Like, of course I'm going to figure something out. So it was like, okay, am I going to get to eat today? That was the question.
So how did you get your first big break?
I think, there's a lot of little things that kind of led up to it, but I think you can argue that the biggest break was Susan Kimberlin coming along and giving me $25,000 to invest in me, and she said, I believe in you. I don't know what this is. I don't know what this will become, but I do believe in that you will make something of it. So let's see what you can do.
Mark Andreessen, Stuart Butterfield, Aaron Levy, all people that you mentioned are now investors.
Yeah, they are.
How do you get a Mark Andreessen to listen?
Well, I think it starts by recognizing that Mark is as human as I am, and as we're equal.
I should add that Bloomberg Beta is also an investor in Backstage.
Yes, at our latest, yeah.
Do you ever worry that you're just checking a box for some of these people?
So I don't worry that I am. I know that I am in some cases. It doesn't bother me, though.
Why not?
Because there's some money that I don't take, and I have turned down, and I won't take. And I have, conviction around that.
Whose money have you turned down?
I've turned down money that was associated with Peter Thiel in the same month that he doubled down on his investment and donation to Trump. And it wasn't an easy decision because
wasn't it like $250,000?
Yeah, it was that. But that was it was a complex decision, but an easy one is how I say it.
You've taken on people like Peter Thiel, Paul Graham, people who are worshipped in Silicon Valley. And that's not been easy for you, I imagine, because the response has been harsh.
Sure.
You have sort of an equal number of supporters and an equal number of trolls. I've seen it on social media.
Yeah.
Why do that?
Because it's the truth. It's how I feel. I'm not out looking for trouble. But the same reason that they are allowed in this country to say what they say, feel what they feel, and do that out loud, and in their cases it has a massive effect on other people, I should be able to speak my mind and say that that's wrong. It's as simple as that.
My interview there with Backstage Capital founder and managing partner Arlen Hamilton. It is a fiery one. You can catch the full episode on Bloomberg Studio 1.0 tonight, 6:30 p.m. Pacific, 9:30 p.m. Eastern. You do not want to miss it. And that does it for this edition of Bloomberg Technology, Bloomberg Tech, live streaming on Twitter. Check us out at Technology and follow our global breaking news network, TikTok, on Twitter. This is Bloomberg.